The issues in China are not one-dimensional. They are also not one-sided. Looking at the emerging market crisis, each country has been affected in some way. Their currencies have been battered, their stock markets have remained weak, and their willingness to do business has stalled due to uncertainty. So we must ask ourselves, what will change in order to reignite the process of growth? You came here for the truth, so let me unveil that for you. Today we are going to look at China. This video will be focused directly onto China. I'm also going to mention Mexico, and you'll see why in just a minute. But let's begin by taking a look at this article. I have several charts to show you. China's holdings of U.S. Treasuries fell to a 6-month low in July, just as the trade issues between the two world's largest economies began to heat up, and this went to $1.17 trillion, still a very, very large amount. I'm going to show you the website of the Treasury and give you that data directly from them. This is the lowest level since January, down from 1.18 trillion in June. So it's not a significant amount that they've decreased, but they have begun a trend of letting that roll off, and it is very important to follow what China is doing, what Japan is doing, because the two of them with trillions of dollars here in total, this is a significant amount that does make a big difference. The Federal Reserve will have to be the lender of last resort, and they don't want to be monetizing all of the debt of the US government because of the obvious effects that that will have. Now, this is talking about the trade issues. This is going on to the weakening of the Yuan and so on, but I'd like to move on and show you the actual document itself. I've been accused on several occasions of creating this document, but if the individual would just take a few moments and do a search online, they would be able to find this for themselves. I didn't make this up. It's ridiculous to suggest it. Anyway, this is showing us the numbers from July 2018, but if you look at the bottom of the page, it's from September 18th, 2018. That's the most recent numbers we have, and that is major foreign holders of Treasury securities. If you want this for yourself, you don't even have to click the link in the description of the video. All you need to do is go to a search engine and type in the words major foreign holders of Treasury securities, and this will bring you probably to the first very link you see there, directly to treasury.gov. You can see it for yourself. Don't trust me, and you can still think that I created this document. What we are seeing here is, on the top of the list, China having over $1 trillion. But as you can see, as I mentioned previously, going back into levels we hadn't seen since January of 2018. Then we have Japan just above that $1 trillion mark. And if we track and trace both of these, Japan for the last few years has been selling off their holdings. Slowly but surely, they've been doing so. And the same with China in a more recent pattern here has been getting rid of some to some degree, no doubt. And beyond that, and you can see everybody in the list here. Some of these are interesting because we see things like Cayman Islands, for example, and we know that the Cayman Islands hasn't been buying it. There's obviously shell corporations that are being used here, and that's what that really is. And any of these countries can technically be doing that, so we don't know officially, but definitely on the top of the list here, China, Japan, those are the two that you really, really want to focus on because of the quantity that they have. They hold the power in their hands. Always, always. The creditor holds the power. China says it won't weaken the currency to boost exports. And this is a topic that I really want to discuss. I've mentioned it many times before, but the peso crisis of Mexico, and I'll show you in a second. Basically, the premier in China said that they're not going to do this. They're not going to weaken their currency. I'll show you a few things associated with that, but I just wanted to show you this. Mexico's financial crisis of '94, and this is also known as the tequila crisis. I read this in a few of the books throughout my research. This happens to be out of Harvard, but it doesn't matter. You could read about it in many, many books. This is where they actually devalued the peso in December of 1994. It precipitated the worst banking crisis in Mexican history from 95 to 97, the largest depreciation of the currency in 1 year, from about 5 pesos per dollar to over 10 pesos per dollar. So imagine the significance of that in 1 year. So you have to understand what that would do to the individuals there. But what it did do was get the economy going in terms of exports. And that has been a lesson to many other countries that if we devalue our currency, we are going to be able to get the exports going. I think it's interesting. China's suggesting they're not going to do that. That's not what this is about. It is all happening internally here, nothing to do with what's going on in the trade issues and so on. So that's a little bit of history for you there. Two PBOC officials say that the currency will be kept stable and authorities may intervene if the market ignores the signal. So always the PBOC will be there to backstop any of the issues they're having. They created the national team, which does basically subsidiary entities of the government, corporations basically, that go out and buy shares of different companies. That's called a bailout, but you can just call it the national team and call it the plunge protection team, call it supporting the markets, call it intervention, call it whatever you want. It's a bailout. Okay, so the PBOC is doing that today. The government of China is doing that today. The Federal Reserve, the Bank of England, every single central bank does this. Every government does this. They have all different measures. They can use quantitative easing type measures. They can do this with the creating subsidiaries and buying them directly. They can actually buy the shares completely directly, as with Japan, you see that. They can do this through stimulus packages like TARP in the US. There's all different methods they have to support the markets and support the currency and the economy as well. This is not really beneficial to what is happening in China right now. You can see the significance of this. It has come up just a little bit, but the trend has been like further and further lows and not as high with their highs, and that is definitely representative here in 2018. As you can see, that has moved down over 20% this year alone. If we go back years ago, it was at 5,000. Today we're sitting at about half of that total amount. So we can see that there is significant weakness here in China, and it's not just because of the trade issues we're seeing right now. That's just more of, recent terms. So they're talking about the premier here. He said that China is confronted with a host of difficulties and challenges in economic development. That is his own words. I didn't say that. It's not from some random news article. That is directly from the premier in China. I think it's ridiculous when individuals put words in my mouth, but whatever, moving on. Deeply integrated into the world economy, the Chinese economy is inevitably affected by notable changes in the global economic and trade context. Indeed, we are facing greater difficulties in keeping stable performance of the Chinese economy. I've been saying this now, I've been covering it, and I hope you've been paying attention. It is very, very crucial to understand what's happening in China today. Looking at the RRR, all right? Reserve requirement ratios are terrible right now globally, and yet what do? Bring them down. That's all you need to do. If you want to fix everything, just bring down the reserve requirement ratios, and that will be all you need to do. Of course, that never works, but here we are. Anytime they're going to have a problem, what they want to do is lend out more money. They want to stimulate the growth, and so they make it easier to get money. They do so for businesses, for individuals, for mortgages, for personal loans, car loans, and so on. There's this weird myth that everybody in China pays things with cash, but I think you're probably about 30 years behind, because that's not the way it is today. There's mortgages, there's car loans, and there's people using margin and debt like crazy. Yes, perhaps not to the same degree as that we would see in the US. The savings rate is significantly higher, but it doesn't matter. All of that financialization has occurred within China as well. You could see the liabilities, PBOC liabilities and bank reserves has been increasing somewhat, but the trend here throughout, I would say from 2017 into 2018 has been declining. So I'm going to track that and get a more accurate statement for you as the months go on. Looking at the PBOC's balance sheet here, obviously we know the direction. It has been increasing over the years, along with every other central bank. They're not doing anything different in that regard. China's banking asset growth dwarfs all others. Banking asset growth since 2008 by country. Well, whether you want to look at China, the blue line right here, the US, Japan, and the Eurozone all have been doing their part. The Eurozone, of course, has been in a deflationary environment at this time, but not necessarily when you look at it in terms of their assets. The central bank has been printing money. They've been doing so intentionally to try to prop up these failed institutions, but they are still having problems with deflation. Is very significant in many respects. So that's where the Eurozone is different than an area like the United States, for example. And last but not least, China, the biggest credit bubble yet, now bursting. Banking assets to GDP in terms of percent. You see that right now, 2018. And what about the EU, the European sovereign debt crisis 2011, and the US housing bust from 2007. So trying to compare all these banking assets to the GDP percentage. We've got a problem in China that's going on right now, and it should not slip your mind. You need to be focusing on what's going on there. This is a very, very big country, and what happens in China will affect the US. There's no doubt about it. This silliness that the US is all powerful and nothing could ever happen and dominoes don't affect the US whatsoever is really only fooling yourself. I'm going to end the video there. If you found it informative, please give me a thumbs up. Remember, this channel thrives on your thumbs up, so I do appreciate that very much. All you gotta do is click that one button if you want to join over 140,000 subscribers on the fastest growing financial channel. You can do so by clicking that subscribe button. I'd like to see you here. Let me know if you're new. I always reply to as many people as I possibly can. If you're more interested in the financial, looking deeper into this financial information, I wrote 2 books about it, and you can see them in the link in the description. Everything from the foundation, the asset classes, how to profit from it, and then how to make money and so on. All of that's available in my books. Check out the link in the description. It'll bring you over to Amazon. If you're more interested in the audiobook version, you can get that at themoneygps.com. If you're still here, I just wanted to extend a thank you to everybody. I don't thank you enough. I try to do so in the comments, but I just really wanted to extend a thank you to all of those people who give me the thumbs up, who have subscribed to the channel, who have left me positive comments, who have emailed me with positive comments, and everybody who supports me as well on Patreon, through PayPal, and so many other ways. Thank you very much. Take care.